Hello, welcome to Gabelli TV. I'm Tommy McKenna, and today I'll be interviewing Simon Wong, our energy research analyst at Gabelli Funds, who will talk to us about today's dynamics in the oil market. Now, oil prices have been very strong lately and are up over 30% in the first 2 months of 2022. Can you explain what's going on in the crude market?
Sure, Tommy. Supply and demand dynamics been very tight in the oil market. This year, I'm estimating the world is producing about 100 million barrels per day but it is consuming 101 million barrels per day. Demand have almost returned to pre-pandemic levels. We're seeing gasoline consumption at record levels. People are driving more. Petrochemicals have been strong throughout the pandemic, and that strain is continuing as the global economy recovers. Domestic air travel has been strong and already back to pre-pandemic levels. The only piece of the oil demand that hasn't recovered yet is international travel, and that is expected to come later this year. On the supply side, global inventory is below 5-year average. There's very little production growth because the world has had underinvested in exploration and production over the last 5 to 6 years. There isn't any significant supply coming onto the market from offshore and internationally. U.S. shale, which was a big driver of supply growth between 2010 and 2018, has stopped growing, with OPEC, which accounts for 30% of global supply. It is having problem meeting its production quota, and there are questions how much spare capacity the group has to meet future demand. And now there are uncertainties about Russian supply after it invaded Ukraine and whether the U.S. will sanction their oil.
And why did U.S. shale stop growing?
At the end of 2019, U.S. was producing about 13 million barrels per day. Now they're producing about 11.5 to 12 million barrels. There's a couple of reasons for that. A couple of reasons why shale is not growing very rapidly. The first reason is the current U.S. Administration's energy policies. It is focused on clean energy and are anti-fracking, anti-drilling. It banned drilling on federal land, slowed issuing drilling permits, canceled pipeline, imposed new regulation that made it more expensive for the independents to drill. Second, when shale was growing, it needed a lot of money to keep drilling. It used all the cash it generated, borrow from the debt market, raise equity, borrow from the banks. Shale company was just not very profitable while they were growing. About 3 years ago, the debt and equity market were closed to these companies. A lot of these investors left the industry because these shale companies were very poor capital allocators. Then banks cut back on lending to this industry due to ESG concerns. And then in 2020, many companies went bankrupt because of low oil prices, and many companies were not able to refinance their maturing debts. Now these companies found capital discipline. Instead of plowing the money they made from higher oil prices back to drilling more wells, they're focusing on paying down debt, establishing a base dividend, initiating a variable dividend, and buying back stock. They're doing all this to try to win back investors. Last year, these companies kept production relatively flat to 2020. This year, they're targeting to grow about 5%.
After Russia invaded Ukraine, there's speculations about whether the West would sanction their oil. What would happen if there is a sanction on Russian oil?
Russia produces about 11 million barrels per day, or about 11% of global supply, and it exports about 4 to 5 million barrels a day. If there's a sanction on Russian oil, that supply needs to be made up elsewhere, and there's not a lot of excess capacity in the world that can produce that much oil. OPEC has some spare capacity, about 3 to 4 million barrels per day, and can probably replace some of oil's lost export for a short period of time. But there's no room for outages and future demand growth. If we sanction Russian oil, supply will get a lot tighter and oil price will go much higher.
And how about Iran?
A couple of things about Iran. First, Iran is producing about 2.5 million barrels per day. Prior to the latest sanction, it was producing about 3.5 to 3.7 million barrels per day. If Iran and the U.S. do come to a new agreement on JCPOA, it will add about 1 million barrels per day back to the market. There's not much upside production capacity there. The other thing I would know about Iran is that it has about 60 million barrels of crude in floating storage that's ready to come back to the market immediately when the agreement is reached. So that will provide temporary relief to supply and oil prices. But putting that in perspective, 60 million barrels of floating storage capacity is about 12 to 15 days of lost Russian exports.
And will releasing the SPR help?
Just a couple of hours ago, the IEA in the US announced that it will release 60 million barrels from the SPR. That's just temporary relief. 60 million barrels is 2 days of open production. The world consumes 101 million barrels per day, so it's less than a day of global consumption. And for the US, which is the biggest consumer, that's just 3 days of that country's consumption.
All right, Simon, that's been very informative, and I hope we can have you on again soon.
Thanks for having me.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.